Back to Market on Close. I'm Alex Coffey in for Marley Caden alongside Sam Vadas, of course, in the New York Stock Exchange. We got Rick Ducat here in studio, though, in Chicago, lead market technician for the Schwab Network. And Rick, we're looking at Eli Lilly as it's making history. $1 trillion valuation for a healthcare company. Monstrous performance again over the last year. How's it shaping up? Looks pretty good compared to some of its peers.
For sure. 10th company overall in the U.S. to join that $1 trillion club as well here. And really the story for Eli Lilly has been one of great strength in recent days, plus 31% or so in only the past 18 trading days. When we get to our candle chart, you'll see only 2 red candles during that time as well.
What sticks out to me, I mean, it's up 42% in the last year, and you just said 31% of it essentially. I mean, that's like 75% of the gains over the last year.
Very true. Yeah, it's been a very swift climb to the upside here, and really doing quite a bit better than many other companies in this pharma space. Most notably, Novo Nordisk, its arch rival in terms of these weight loss GLP-1 drugs. That's the maker of Ozempic here, down 53% during the same time period. So a very stark contrast. As you said, though, Alex, when we were chatting before the segment here, Eli Lilly has a diverse pipeline of drugs, lots of acquisitions, an obesity pill in development that the market seems to feel looks promising here. So it's really more than just this weight loss drug story. It would be tempting to just say that's all it is, but it's really not that.
Yeah, it gives it more stability than just sort of these pure plays, but also hard not to discount that that's been a big part of the growth story for a lot of these names with that exposure. But I know you keep an eye on the analysts as well. What else is sticking out here? Yeah,
mostly more positive analyst coverage here. The most recent one was a price target raised from Truist on the 19th. Kept their buy rating, raised their price target to $11.82. We also saw JP Morgan, Morgan Stanley raise their own price targets to $11.50 and $11.71 respectively here. So seeming like, these analysts are feeling like there's some room to run here. And really, it's a extreme push to the upside here. This is kind of that period I was talking about where we had only a couple of small red candles there. But really, when we look at our trend lines, you can see the acceleration of trend to the upside. We're trading within this very narrow, very steep white channel here. A general thought, too, just the steeper the move, the less sustainable it is. Not really speaking to the long-term prospects or the overall outlook, just there's only so far a red-hot trade can go before some of it starts being given back a little bit. That day doesn't seem to be today. We're at the all-time highs, 1060, 665, almost at the highs of the day once again.
Well, and incredibly, too, this hasn't been the strongest 3-4 weeks in the overall market either. So it's doing this as volatility has started to swell a bit elsewhere. But, I had a double take. This is a candle chart, and these are daily candles. That almost looks like a line chart on a 1-minute time frame. That's an incredible ascent.
A very sharp push to the upside here. When we look at some of our other studies, this is one of the times when moving averages are less helpful because of how fast the move is. They're a lagging indicator by their nature. You might consider something like a 9-period exponential moving average that comes in right around 1021.50. Our 21-day, normally what's viewed as the fast one, is lagging quite far behind. That comes in at 962. RSI is still overbought, so quite strong, quite near the upper end of the range. But I will notice that our green trend line has been broken. We are seeing a tiny bit of bearish divergence as well because price is on pace for a higher close. RSI has not made an accompanying higher reading as well as we approach the end of this trading day here. Not necessarily a head for the hills statement I'm trying to make, just something worth noticing here. When we look at our standard deviation channels, the +3 and +4 channels, red and purple respectively, come in at about 1028 and almost 1100 on the nose. So those would be some short-term areas to consider as well. Volume, we haven't had much time to accumulate volume, but the nearest area here is kind of around that +3 channel, so that stands out as potential support. Not really much serious in terms of volume until we get all the way back down here near those old highs around 920, 930 or so.
Yeah, and is it one way to say, I always like to use analogies, Rick, we go back one real quick, 'cause I know we got option stuff as promised, but Is this almost like the RPM, like the speedometer or odometer or whatever? I don't know, one of the odometers on the car that's like ramping up in terms of we're way up in the red zone right now. There's really not any more like how much faster how we go? I mean, what is that, 85 for the RSI?
RSI only goes from 0 to 100. That would be one way of thinking it. It's what we're seeing here is that the pace of the gains is starting to slow down. So it's the highs are getting more and more, I guess, incremental, you could say here. So there's only, with a car, for example, here, there's only so fast it can go before it has to kind of take a breather and
downshift, whatever, slow down. Yeah.
So that might be one way of thinking of it, yeah. But the other thing is, too, stocks aren't cars. They can keep going up in ways that you might not expect. That's the whole concept of these fat tail outsized returns that is the ultimate quest for traders.
Well, and again, I has got my attention that it's doing so well with some of the other stuff that hasn't been. But let's get to some of this options activity. I'm sure with this move, there's been some added interest recently in LLY.
Sure. So we can see that what we have here, the purple shaded area, December 19th expected move, 28 days out, $85 plus or minus, so about 8.1%. Doesn't really line up super clearly with any technical points at this point in time here. So just a general boundary to consider as we go forward. We will say that for this December 19th expiration, there's very heavy call open interest at the 1,000 and 1,200 strikes, as well as much lower at the 880 strikes. The puts much more widely dispersed, as is often the case. The highest activity at 800, 960, and 1,000. One interesting trade I saw, plus 500 January 16th, 1040 calls at a 77.90 debit, and minus 750 March 20th. 1,100 calls at an 82.10 credit. That comes out to a net credit of $2.2 million. Kind of an unusual setup because the short calls expire later than the long calls, so there's the risk of having naked short calls. But even at the get-go, 1/3 of the position isn't covered by the long calls, so it makes me think there's probably a stock position going along with this one, but we'll never know for sure. We only have the information we see here.
Yeah, it might be even a rolling trade, perhaps some sort of covered call-like position, but you never know. Could just be an interesting diagonal setup going into next year. But Rick Ducat, always a pleasure.